Welcome to the StockMentor.com studios. I'm your stock mentor, Brian Johnson. And stocks hammered today. They got hammered today. Down really good, and it wasn't just that they got hammered. Okay, it wasn't just the move itself. It was the volume along with it. It was a huge volume day, actually, to the downside that we saw. So, what did we talk about yesterday? All right, I'm going to go over just a couple of quick things. We're going to wrap up this weekly thing, and I'm going to get on with it again on Sunday. But let me cover a few things. Number one, we talked about 10 400 and 10 300 for entries. Yesterday, I changed it to 10 250. So if you took trades below that, great. I talked about other places that you could get long, get short. But in the interest of being fair, I must say that, yesterday when I saw 2 consecutive days of consolidation, my bias was a little bit more towards the bull side today, and then for a pullback come next week than it was for a drop today. So I will be fair with you guys. Obviously not perfect. I'm not 100%. I've been, I believe, pretty accurate lately with my calls. I was a little bit more biased going into today with a long side, but we had good entries to the short side, which you guys all had levels for. So I hope you guys had both levels in place. With that being said, where are we at now? Well, let's look at it. 1, 2. This still looks clean. I love the 60-minute Dow. 1, 2, 3. 4. This looked like a consolidation. Maybe 4. Maybe we're working on some sort of an A, B, C down before another 5 up. Or are we looking at the beginnings of a 1, 2, 3 to the downside now? Anybody's guess. Really, this is tough. This is another one of those in-between modes that we were left with on a Friday afternoon, go figure, by the markets to allow everybody to just kind of go, well, what about all weekend long? The truth of the matter is, by the end of the weekend, I'm just going to have levels for you. Okay, we're just going to look for breaks of levels, just like we always do here at the Stock Mentor. We're going to use Elliott Wave for confirmation, not indication, and we're going to continue to just use regular technical analysis for our entries up and down. That has served us very, very, very well over the past umpteen months that we've been doing this. Okay, on to the daily, and you can see here where we had the huge run up starting back about a week and a half ago, and then today, and then the last 2 days, look, consolidation, not being able to break the 200, and not being able to fall back below the 50. Yeah, today, butter. Just sliced through both of them like butter. Any entries back below these areas here made you some good money today. It was heavy volume to the downside today. It was strong movement. I will be doing a lot more and a lot more in-depth stuff with my subscribers on this. So if you're interested, think about that. If you haven't signed up yet, it's $15 a month. It's totally cheap, but there's some good stuff to be gleaned from what we saw here, along with some new lines and stuff that I'm going to draw in for them. The NASDAQ on a 60 also fell down. Once we broke this 1830 line, it was off to the races. The whole market today, everything was a decent drop on really good volume. So once we broke back below this area, it was all over. It was all over. And you could see the bulls cover. Once we broke below this area, the bulls were like, I'm selling, I'm gone. And the bears absolutely took over. Here it is from a daily. Look at that. We had a nice push up. We got above the 50. I said I always give the bears at least a day or two to get back down, and it took one day, and they drug it right back down again. Once again, big red candle on decent volume. So does this mean we're going to crash to new lows? No, not yet. Not yet. So don't get ahead of yourself. We'll talk more about it this weekend. From a weekly, though, this does change things considerably. Look at what we were seeing right up here in that 1850-ish area. And I had said yesterday, I said, well, I'm not so sure we don't stick around there by the end of today. Well, obviously, that didn't happen. We saw a sizable drop. I mean, it wasn't like off the charts, holy smokes, look what the NASDAQ did drop. But it was enough to bring it back down to about where we started the week, and even actually below when the weekly was all said and done with. So where does that get us? Yeah, right back below the 50-week moving average. So we saw the Bears break it, the Bulls try to take it back, and the Bears are fighting with them again to try to hold below it. So once again, just consolidation from a weekly, but an interesting end to the week. Noticing that from a daily, the Nasdaq dropped 52 points in one day to make it all the way back below the 50-week moving average by the time the week was over with. You just never know what's going to happen with the weekly candles. So exciting when this stuff happens, especially if you're on the right side of the trade. SPX on a 60-minute, I mentioned 1085, 1080 for the more aggressive, 1070 for the less aggressive. Either one of those good entries today, making you money in the overall scheme of things. Here we got right back below this area here, this little support area here, which wasn't hardly support on the way back down. Light line, so it's very light support. And the 20-day moving average, and that was, of course, right below that 1070 area that I talked about. Good entries both ways. From a weekly standpoint, it did hold. Who won? The Bears. The Bears won here at the 50-week moving average. It looked like it was going to be a little bit of a fight, wondering if the Bulls were going to be able to pull it out, but they didn't. The Bears just absolutely beat them up today, bringing this right back down now into a very bearish look and showing that the 50-week still holding as strong resistance till otherwise broken. The VIX was up, but not up in a big way. Once again, okay, was it confirming? Yeah. Okay, VIX went up, market went down. Great. Usually when we see these type of moves, though, it isn't uncommon to see the VIX move 10%, 9% on a day like this. We didn't quite see that. So, as it is, you know what? It just is what it is. It finished the week up all week long. Maybe that was the leading divergence. Maybe the VIX here showing us a little bit of that divergence. Fear grew most of the week, and today played itself out all in one day in the markets. While the VIX slowly bled itself upwards, we might want to pay attention to those type of things next time. From a weekly standpoint, holding right around in this area, still kind of in the caution area for me. This is all consolidation. 1, 2, 3, 4, 5 weeks or so of straight sideways movement in the VIX tells me that the markets are still undecided on whether or not they're really fearful of what's going on, or if there's a lot of fear left in the market. Apple was down $1.55 today. Once again, that whole consolidation thing I talked about, and this is probably what we'll see out of Apple right before earnings. Now, if it does drop below this, we might get some trades on it back into here next week, but that's anyone's guess. It's still just moving sideways. I really think some of these are just going to hang tight until earnings come out. Then we'll start to see the movement. It did manage to hold above the 20-week moving average once it was all said and done. However, this look is not bullish at this point. It's still bearish. So earnings, once again, for me, it's all about Apple's earnings. FAS, big move down today as the financials kind of fell out of bed, and that was one of the major things that led us downwards today. 12%. That's a huge move. So any breaks of these areas here giving you great opportunities for some trades coming right back into a heavy support area. Same thing from a daily. Look at this. We talked about breaking below the 20-day moving average, back below 21. Gave you a good trade back into today about a buck or so. FAZ on a 60-minute then doing the opposite. My entry for you was above probably 15 from the more conservative side, back up to at least 1550, if not then 16. Our high today was 1591. So good trades available there on FAS and FAZ. And coming back to do what? Oh, wow. This was most impressive. Not only a big gap up by FAZ, but then the run up back above the 50, back above the 20, after we saw kind of this motion yesterday, just clearing the way for a big move upwards. And look what it did. Stopped right at that blue line. How pretty is that? Loving this blue line. So obviously in the right spot. All right. So overall, the week saw a little bit of everything. We saw some move, a little move up in the markets. We saw some sideways consolidation in the markets, and ultimately at the end of the week, the Bears had the final say coming out of options expiration week. So we will follow what happens next week. I will be back with you on Sunday, but keep in mind we're left in a tweener mode. 1, 2, 3, ABC 4 before 5 up. Or I could give you 1,000 counts right now. There really are 1,000 counts. I'm going to give you some levels this weekend to be watching for breaks. We'll decide what the quote-unquote count is some other time. But let's get our levels set in, and we'll be ready for some real trading again coming into next week. At this point, anybody's call. If you held over the weekend to the short side, I would say you're probably better positioned than those that might have maybe taken a long position at the end of the day. But right now, anyone's guess. Let's revisit it this weekend. I'll be back with you on Sunday. Have a fantastic weekend. Bye.